What is going on, investors? Eventful day in the stock market from a number of different angles, but particularly here on the channel when we go over the earnings of some of these major companies. Today, we're going to take a look at Facebook, ticker symbol FB. This one's actually jumped around quite a bit in the after hours, created a pretty large candle, created a buying opportunity actually in the after hours trade. We'll talk about the stock chart here in a little bit with Facebook. Now, we'll jump into the numbers as well. I'll talk to you about a couple of key points on the press release, and we'll jump into the numbers. We'll talk about what they look like this year, and then more in particularly next year as well, given what Facebook guided to. Now, some interesting stuff came out in the press release and the slides as well. It showed that US and Canada disappointed for the second quarter in a row. They had 195 million daily active users versus kind of an estimate of 195. So it's just slightly down, but it's showing that engagement and users are kind of just basically reached their peak here in the United States and Canada. I don't think anybody's really surprised by that. However, you do see large growth in Asia Pacific and Europe and other places around the world, but you've got to figure those markets will starting to flatten out just like US and Canada. When that will it be this year? Will it be next year? Will it be 2 years from now? I think it's really anybody's guess, but Facebook's going to have to try to extract more money from the same amount of users at some point. I think that's going to be a challenge going forward with Facebook. We'll see how they're able to tackle that in the future. Now, one way they could benefit the stock is by doing share repurchases. Now, they had a buyback in place of about $34 billion. At the end of 2020, they had about $8.6 billion left. Well, the board of directors said, here's another $25 billion to repurchase stock. So Facebook's going to be able to support their shares and their earnings per share, which I think is a lesser degree something people pay attention to with Facebook, and they don't pay a dividend, so it doesn't reduce that payment either. But we had a $34 billion buyback. We spent all but $8 billion of that, and now we added another 25, so we essentially got another about $34 billion on a buyback in effect with Facebook. That should help shares. Now, one more thing I wanted to show you from this press release. They say we continue to expect our capital expenditures, we expect our total expenses here. So this line right here is a big one, 68. So our total expenses to be 68 to $73 billion. I want you to keep that number in your head. 68 to $73 billion total expenses. So let's come to their financials, and we've got 12-month here, and here's the most recent year, 2020. So we'll come down here to total costs and expenses. And I want to show you what they spent this year. They spent $53 billion. And I want to repeat that they projected 68 to $73 billion for next year. This is in line with what they expected, but take a look at what this would do to their net income. Let's just assume that these costs came forward into this year. So they spent $53 billion. Okay, we made $85 billion this year. Here's our top line up here. Revenue in the most recent year made $85 billion. Now we have other costs, like cost of this revenue, extremely high margin business because all the ads are basically run by computers and algorithms. It doesn't cost a lot of money. In fact, it only costs $16.7 billion to make $85 billion. Now you still need some R&D, some marketing, and some general and administrative expenses. That gets us to this total cost of $53 billion. You minus that from 85, and you get our income from operations at $32 billion. Now that's way ahead of where we were, about $8 billion over where we were the previous year at about $24 billion. But here's the catch. So we come down here to net income. We made $29 billion after we pay some taxes and things like that. Again, that's about $11 billion over where we were the previous year. But remember that they are projecting in the next year 68 to 73 billion. Let's just give them credit for the highest number of $73 billion. That's $20 billion more than what they spent this year. Given the same amount of revenue, obviously Facebook is going to grow their revenue. This last year, they grew it by about 15 billion. Maybe we'll give them credit to grow it again by about 15 billion. That'd get us up to about $90 billion worth of revenue minus $73 billion in cost, and you're basically flat or even down on this net income side. So it's just something that you want to keep in mind, that if Facebook's not able to extract more money out of the platform, more profits without controlling these costs even more so, well, it could lead to actually lower profits next year. We'll see if that materializes. I think that had investors somewhat nervous initially with Facebook. Also, the fact that these active users numbers in US and Canada definitely look like they've basically plateaued. In my opinion, that is more than likely what has happened. Everybody that has a Facebook account, everybody that wants to use a Facebook account pretty much has one here in the United States and Canada, and that number is not going to get any much bigger over the coming years unless Facebook were to acquire maybe another app, which I think would be hard to do, or create something that just drives more people onto the platform, which is certainly something they could do. Now, here's the deal with Facebook. This stock is basically now, I think this stock is really just in a new range. And we've had a lower end of this range where if you wanted to come in here and buy Facebook, down here at this lower end range was good. In this range, in this box was good. Now this range, wouldn't necessarily think that you want to jump in here and grab Facebook shares. I think if we come down here to 270, if you're just dying to buy Facebook, it's not the worst level, but if you're at 270 and that level breaks, you could come down to 257. Even this candle here is like 2 weeks ago. Okay, it's not that long ago. This stock could easily come down into the 250 range. Now, here's the line in the sand with Facebook. It's actually this 285 level. You see here, this 285 level right here. This stock tried to get over it here. It tried to get over it here. It did for a minute here, just for a little bit, and it's always sold off when it's hit this 285 level. The exact same thing has happened over the last day or two with Facebook. It reached that 285 level and just got rejected. Two things happen here. This level proves to be a very, very solid level, level too hard to get through, and more sellers, the buyers basically dry up, and this stock drops. Now, the other thing that could happen is buyers start to emerge, and it pushes us through this 285 level. What's going to create buyers to emerge? I don't know. Maybe a share buyback, which they've got $34 billion worth to kind of play with. That's potentially what could shoot this stock higher in the coming weeks ahead, could actually be Facebook buying up the shares. We'll see if that materializes or not. Obviously, sellers would be on the other side of those trades as well. But this 285 level is a level I would monitor very closely with Facebook. If you're in this for a trade, I think you could buy it in this low 270 range, and it peaks up to 285. That's when you start either hit a trailing stop or you start exiting the position. Any deep pullback in this stock into the 250 range, my opinion, is probably a buying opportunity for Facebook. So that's Facebook. Looking pretty solid. Not as stellar as I would have liked personally, but not bad. It doesn't create a great buying opportunity with a kind of a deep pullback, and it's kind of sitting in no man's land. I think it's a stock you want to monitor. We cover it every Friday here on the show. Maybe consider hitting that subscribe button and checking out some of our other videos if you like this one. Hopefully you guys are doing great out there. We'll be back soon. Good luck with your investments.